Good morning, everybody. Welcome back for Tuesday's pre-market analysis on the S&P 500 futures market. It is September 14th, 2021, and we are now on the December contract. So we have to go ahead and start building out some new levels on this new contract. We don't have prediction points loaded up here. And from now on, I'm going to hide all of our important levels that we mark on the chart, only because they are really, really great stuff. I don't want to share it with the world. If you want to join us here in the trade room, you'll have access to all those important levels every morning. And very quickly want to show you guys where we ended up bouncing yesterday, because we talked about this. So we talked about this when we were back on the September contract, which is what we were trading going into the open yesterday. And we talked about this leg here from the low of August 19th to the high, the all-time high, which now that we're on this new contract, everything has kind of shifted down about 10 points on the ES. So looking at the levels now, you can see where we bounced, right? So we talked about this area right around the 50% retracement of this entire leg. And so the 50% retracement was 44.39, and it lined up right with this previous resistance in the market that we talked about. Came up right to 49 once, came up a second time, and then had a pretty violent sell-off there back at mid-August. So the market came down right to 50%. It broke it by maybe 2 or 3 points there, had a little probe down below it, and now is holding above. And so that bounce right there is something we essentially were expecting. It did push just a point or two below where maybe we would have expected it to be in a perfect world, just bouncing off that high to the tick there. But pretty awesome stuff. Now, as we hold here, this could mean that we are going to come back up, test the all-time high, and maybe continue to push higher. The 27% extension of this specific, the most local, larger leg that we're looking at, would bring us right up to 45.95, almost to 4600. So pretty cool stuff there. Let's go ahead and jump to our ultra high time frames and take a look at everything now that we're on this new contract. So things did shift just a little bit. This was like 21.26. It's now 21.17. But looking at everything from our divergence perspective, we do not have any signs of exhaustion. Everything still looks really strong. Of course, we do have a little bit of a red bar forming here on this new quarterly. Again, it's typical for us to see a series of strong green candles. And on my chart, the case is they're blue, but strong blue candles, and then one or two, corrections or pullbacks, and then a continuation. So we are seeing a little bit of that right now, but no signs of exhaustion from that divergence perspective. On our monthly, went ahead and kind of redrew some of these slopes or trend lines, support lines here in the market, and we're still essentially kind of holding just above the current line, which might be hard to see, but I drew it off the low here and the low there. And if you extend that out, we're still holding above it, maybe a slightly lower slope compared to that push that we got back from the COVID sell-off going forward into the end of 2020 there. But still looking very strong from divergence perspective. No indications of exhaustion up here. And again, we do have that red candle situation at the moment. Let's look at the weekly here, and so far, so good with that bullish potential divergence there. You can see the RVI pushing extremely down from 78 all the way down into 71. Price pushing up from about 43.36 to a low of 44.36, so about a 100-point push higher. So we'll still continue to monitor this and see how it looks at the end of this week. Just keep in mind again that we can pull back another 100 points. We'd still have that bullish divergence. And let's go down to our daily. Okay, so yesterday we talked about this situation, how we had a little bit of a bullish case off the low. I think if I recall correctly, I was a little hesitant about what I was seeing at the moment. Well, it looks like we're going to have to redraw this now. You can see that the low that we made from that candle on September 10th on Friday did continue to follow through to the downside here along with the RVI signal, and eventually got this actual peak. Now, like I said, we might have to wait for this candle and then the candle for today to form before we get a clear picture as to what's going on down at the bottom here on RVI, because we really want to see a peak there. So we want this RVI to close up around, up like that, so we actually have something to compare. But for right now, what we're seeing is off the previous daily low over here, we do have a very clear bullish divergence right now. So nice bullish divergence on the daily off the lows. And I think that's really all we can say right now. We did have, again, looking at this new December contract, you can still see the bearish divergence off the all-time high. And from there, from September 3rd, we've got this sell-off. And so let's go down to our 4-hour here. 4-hour got a really nice bullish divergence off the previous daily low. So we've got agreement with what we're seeing on the daily. And now currently there's a little bit of an argument for a bearish divergence on the 4-hour. However, off the highs, essentially our overnight highs. However, it has time to develop. Again, this actually looks very much like yesterday. So the picture right now, pretty decent bullish divergence off the low of the previous daily candle, but still potential that it could continue to carry through. And then on our 4-hour, a nice clear bullish divergence off the previous daily low, with the potential of a bearish divergence here if this closes at 7 a.m. and is still looking the way it's looking right now. So we'll kind of have to monitor this going in. And as you can see, if we zoom out, we have some pretty strong support in the market right around where we're currently at. So market came down to about 76.25 here, got a strong bounce, came back down, retested it, came to 77.50, got a strong bounce out, and then broke through. Now we did come up and essentially test that area once, but I'm just pointing out that we are pushing right back into that right now. And again, looking at it from this larger perspective, you can see it came right down, right to the first area we expected, the 50% retracement, and essentially right off those highs from August 17th, we've got the bounce right now. So let's go down to our hourly, and we've got the nice bullish divergence off the previous daily low, and a little bit of potential bearish signals that we're seeing right now. Again, this looks very much like yesterday. So far, pretty good, clear bullish divergence off the previous daily low. Maybe that today we have a little bit of a stronger daily signal there. But we do start to see a little bit of some bearish signals off the current overnight high that could follow through. So we're going to have to see when everything closes at 7 a.m. So it feels like a Groundhog's Day situation where we're looking at essentially the same arguments that we had coming into the market yesterday. So let's come down to our 30-minute. And 30-minute wise, not too in love with, let me see here. I don't see anything too strong for a bullish divergence off of this low that we have. We might have a subsequent bar type situation. It pushed down a tick or two, pushed up a tick or two. So I guess there could be an argument there. So still somewhat of a bullish argument off the previous daily low. And then you can see building up right now, pushing to the new highs compared to the previous highs here. And we're getting a lower high on RVI. So still potential bearish divergence. Now this candle did close, so it's still there, but remember, if this next RVI continues to follow through, we can't really make a signal on a straight line. So this could potentially not be a signal, but right now it is there. So we do want to keep in mind, everything is still showing the potential for some bearish indications off the overnight high, but we do have very clear closed official bullish signals off the overnight low, or the previous daily low. And then looking here on the 10-minute, the divergence analyst did not pick it up, but again, a tick or two lower here in price, a tick or two higher here on RVI. So still pretty nice bullish divergence off the previous daily low. And currently, I think the 10-minute, let's see here, I think you could make an argument, but we don't have like a local bearish divergence, but off of these previous highs back here, we've definitely pushed higher, and we've pushed lower on the RVI. So a little bit of a bearish argument there on the 10-minute as well. So we're kind of stuck in this situation where almost every time frame has a bullish divergence off the previous daily low, and then we're starting to see potential bearish signals off the overnight high. So that's essentially where we're at. We're going to have to see if they break through the overnight high and they can get through the previous daily high here. So the previous daily high was 44.8350. If the bulls can break through the overnight high, get through the previous daily high, then there's a potential we're going to negate all of those bearish indications and a few signals that we're seeing, and potentially follow through from all of the bullish signals we're getting from the previous daily low. So that's what we could expect to happen this morning if they do kind of come back down. Remember, getting through that overnight or previous daily low is going to be somewhat of a bearish situation, and then we're going to have to zoom out and come back to this whole retracement and look at some deeper levels of potential support. And I have emphasized the fact that we have kind of this naked area right here at 44.0475. Maybe we could say like 04 to 05 right here, where we have this previous resistance in the market that wasn't tested, and it's just a little bit below the 61.8 retracement. So just keep in mind 15 to 15.50 there is 61.8. Very possible they come down, test that to the tick, get a reaction, but just a little bit lower brings us right into that previous resistance, and it's essentially the 27% extension of that leg that we're dealing with to the downside right now. So just some levels to watch if they do end up kind of going against the bullish case that we have off the previous daily low. And then on the flip side, as they continue to push here, we do have some decent areas of support and resistance. Now, like I said, I'm going to keep our eye levels for our chat room kind of private and only for members of the room. And that's because on the last contract, the levels work so nicely that I don't want to just kind of give it all out for free here. I'd like to have you guys join us and take advantage of the eye levels that we identify. And so I think that's where we're going to leave it for this morning. Again, maybe not the most conviction for one direction this morning, and that just is what it is. Some mornings we're going to have a case where everything is 100% clear and we have a pretty good idea of what direction the market will be going. This morning it just doesn't happen to be one of them.